Good afternoon, everybody. I hope that you are all well. My name is David Kelly. I'm the Executive Director of the British Chamber of Commerce here in Singapore. A very warm welcome to today's webinar, which is all about business opportunities in China and Singapore. Over the last 6 months, we have worked hard to continue to share knowledge using webinars and podcasts to connect with our members and bring you the latest information from industry and our wider stakeholders and partners across the region. Today, I'm absolutely delighted to be working in collaboration with the British Chamber of Commerce in China, with speakers in both countries and members of the audience from Hong Kong, England, Kazakhstan, just to name a few today. On our panel of speakers today, we will be exploring the challenges and opportunities for British businesses in China, Singapore, and Southeast Asia. We will hear a little bit about the British Business in China Proposition Paper 2020, a fantastic report created by the British Chambers of Commerce in China to provide advocacy and representation on behalf of British businesses operating in China. Understand some of the opportunities in Singapore and Southeast Asia for British businesses, and the UK-Singapore-China relations piece as well. The timing for this session is absolutely perfect. 2020 marks a significant milestone in the relationship between Singapore and China. It was 30 years ago that both sides established diplomatic relations. Since 2013, China has been Singapore's largest trading partner, and Singapore has been China's largest foreign investor. There are 3 major government-to-government programs between Singapore and China, including the One Belt, One Road initiative. The Sino-Singapore collaboration continues to evolve, and we are seeing more Singaporean companies venturing into the services sectors in China in areas such as food, healthcare, education, and environmental services. So with relations strong, this collaborative webinar, where we will be exploring the challenges and opportunities for British businesses in China, Singapore, and Southeast Asia, is set to be a fantastic session. This will be followed by an open discussion touching on the areas such as investment opportunities in Singapore and Southeast Asia, the rerouting of global supply chains across Asia, China's role in businesses across APAC, and how companies from the UK can navigate the current geopolitical situation in Asia. Before I hand over to our first speaker, just a quick reminder for all of you on the call that there is a Q&A function on this call today. You can submit questions anonymously to our panel at the end of the session, so please do pose your questions to our team. And we will be recording this event as well, so for those that want to go back to the content and listen to it again, we will make sure that it's available for all members. So without further ado, I would like to introduce Stephen Lynch, the Managing Director of the British Chambers of Commerce in China, who will start the proceedings. Steve, a very, very warm welcome to you, and over to you.
Thank you very much, David, and good afternoon, ladies and gentlemen. Absolutely delighted to be on this call, on this Zoom webinar. I'd just like to say this is one of the positives of COVID-19, the coming together of the global British Chamber network. You know, we wouldn't have been in an opportunity to host this session within Singapore, so it's absolutely a great pleasure to be doing this. Today's session, we're going to initially look at the position paper, which is the role of the British Chambers here in China, and I'd just like to quickly touch upon that. The role of the British Chamber in China changed, and this changed due to the Brexit referendum, where the British businesses would no longer be represented here in market through the European Union. And that meant that the role of the Chamber had to change as well. So we stepped up in regards to our advocacy, our policy work, and we created, looking at the market access issues and the business environment issues to lobby both the British government and the Chinese government to improve this environment for a better working environment and more potential of British businesses operating here in China. And that led to the position paper. We launched that back in 2018. And just recently, we launched our second iteration of that, the position paper for 2020. And as mentioned, these touch upon the major market access issues, the business environment issues, but also the opportunities, and looking forward where the UK and China can collaborate. And just one thing to mention is last year, bilateral trade between China and the UK exceeded £80 billion sterling. If we add on Hong Kong, it's £104 billion sterling. This is a critical market for British businesses. So moving forward, there is issues, but there's also opportunities as well. And so what we'd like to do today on the call is address those, to look at the issues across China, look at the issues across ASEAN market and UK, China and Singapore working together. So we have an absolutely phenomenal panel that will be having an open and robust conversation around China, a conversation around Singapore as well. We also have John Edwards, the new Trade Commissioner to China, will also be on the line outlining some of his key priorities as well. So without further ado, I'd like to hand over to the Chairman of the British Chamber of Commerce. He's also a partner at BRUNSWICK, Sinjin Moore, who's going to take us through the key findings from the position paper. Sinjin, over to you.
Thank you, Steve. It's a great privilege to be here with everybody today. As Steve mentioned, Zoom has been a blessing and a curse over the last few months, but certainly the blessing is bringing us all a little bit closer together. Now, I'm going to share my screen and take you through what Steve was just mentioning, which is the position paper that the British Chambers of Commerce in China released in the middle of this year. Steve has given a little bit of background as to how we got to this point of focusing upon the advocacy and the position of British business in China. This is conceived around and really driven because of Brexit and wanting to make sure that we have a strong voice in the bilateral relationship with China. As Steve noted, we're seeing growth in that relationship year on year. And the relationship the UK has with China, we are the second largest trading partner after the outside of the EU, between UK and the world. Now, this position paper, a lot of position papers focus upon where things are going wrong and lobbying and positioning to the government, in this case the Chinese government, how things could be enhanced and what needs to be corrected. We have been taking this in over the last 2 years in the previous position papers to the central government here, and they've been very receptive, in part because we have been talking to them about where things are genuinely improving, where there are real genuine opportunities for business here, for British businesses in the country, but also presenting to them where things can be enhanced. And there is genuine receptiveness to that conversation. So I'm going to take you through very quickly the summary of this year's position paper. There are links there if you want to scan the code on the slide. It's a very short read of about 140 pages, but a very good read and very detailed that goes in sector by sector. So where does this really come from? Now, this is drawn from across the entire chamber network in China, in the mainland. And there are 4 different chambers within the mainland network. And so this is representing the views of about 850 different British businesses operating here. The real purpose is to advocate for a fair, open, transparent, and well-regulated operating environment where we can all genuinely succeed out here. This year, we've looked at a number of different sectors. And so across industries, 10 different industries are covered. We're also looking very closely at the cross-cutting sectors. So how is the foreign investment law, cybersecurity, other forms of operations that go across all of those industries. Now, before I talk specifically about this year's position paper and what we've taken into the Chinese government, what we've shared with our colleagues in DIT and on the British government side as well, I think maybe we first start by looking back. And this is looking from the year between publishing this and publishing the prior paper. So this is covering the second half of 2019 and into 2020. Now, clearly, it's a year of 2 halves. It's a year of 2 halves here. It's a year of 2 halves for everybody, because clearly 2020 has not been the year that we anticipated. Now, as we were closing 2019, the Chamber ran a sentiment survey, again, polling members across all of the mainland, to ask them, what did they really think? What were they thinking as they went forward into 2020? Now, what we saw at the end of 2019 was broadly positive. Most businesses were actually seeing the genuine market potential. They were planning to actually increase investment as they went into 2020, or possibly just maintain where they were. But they were not looking to leave. They were looking to double down and genuinely invest further because they saw the market opening really making a difference. So that's a positive. Now, of course, at that time, nobody anticipated what was about to hit us in January and really through this year, so where we are now. Now, What's been driving that? What's been driving that cautious optimism? I'd say it is actually seeing genuine implementation of the foreign investment law, the broader investment climate. We are seeing positive movement on that. In the two sessions, which is the annual meeting of the Chinese government, this is traditionally held in March. For this year, it was delayed to June. In that session, a lot of positive comments were made by Li Keqiang, the premier, reiterating a commitment to foreign investment, a commitment to opening up, noting that the opening up is a core part of the reform agenda here. The NDRC, the National Development Reform Commission, which is a super ministry that sits across all core sectors in the country, said similar things about expanding the catalogue of industries for foreign investment, dismantling hidden barriers that limited market access, an end to unequal treatment. Wonderful words to hear. But for those that have been engaged in China, of course, we've heard wonderful words before. And the key thing is about, do we see action? And this is a journey. Those that have sat here for a long time in the country, it is not the same place as 10 years ago, 15 years ago, 20 years ago. But it is imperative that we continue to push for that execution on the positive words that we're seeing. Now, if we can continue on to look at what is that uncertainty? Now, at the end of last year, the uncertainty that was hanging over over the members within the British Chambers of Commerce here was really in the second box here. It was the slowing economic growth that is happening in China. Now, this shouldn't be a surprise. We've known that the economy was going to be slowing at a natural level over the last period of time, but that continues to present uncertainty, and more so from the uncertainty that's driven by relations outside China. So the bilateral relationship, US-China, the relations into Europe, that is causing uncertainty, which is sowing questions about the ability to continue to invest here. The US-China trade war, interestingly, when we asked members at the end of last year, didn't actually rank that high on the uncertainty. Now, a lot has changed, even from December through to where we are now in the state of the US-China relationship. And that is causing new friction. And of course, our own relationship, UK with China, is also a relationship that continues to evolve. Now, COVID-19, when we released this in the middle of this year, COVID-19, we were in the thick of it. We actually, when we launched this in June, only a few days later, Beijing shut down again because of an outbreak of COVID-19. Things are very different here. And I would say that when we launched this, what has changed is genuine optimism across China, the ability to move about, and you feel it in the sense of business on the ground here right now. And maybe we can come back to that a little bit later in the question session. Now, again, just thinking about opportunities here. Projections for the year ahead. Anybody that really tries to predict anything is probably destined for failure, but not saying that the EIU will be destined for failure here, of course, but the projections looking forward certainly present a positive picture of China's growth potential compared to many other markets in the world. And as we come through Q3 and look towards Q4, certainly looking at the uncertainties in other markets and what we're feeling on the ground here, it's certainly true to feel that there is that growth opportunity is genuinely here on the ground. Now, looking more broadly, Steve touched on this just now, the state of the relationship between the UK and China. Now, this is a relationship that is very important. It's a relationship that has genuinely grown year on year. Last year, it surpassed 80 billion. That's an 18% year-on-year growth. But it's also that exports themselves from the UK to China grew by 34% last year. So it is a relationship that is growing on both sides, which is positive to see. And again, as Steve mentioned, if you added on Hong Kong, you exceed now 100 billion in the trading relationship. And for that reason, we have been very keen from the business community here to push in our post-Brexit environment for the continued improvement in the relationship between the two countries, and to be looking at a possible free trade agreement that should be made a priority. Now, the UK has made 5 countries a priority in this first wave of looking at the free trade agreements, and we are certainly keen that the 6th country should certainly be China. Because if you actually put the relationship the UK has with the rest of the world and look at it from that perspective, you see very clearly that China is a critical relationship on the global stage for the UK. We are the second largest trading partner in China with the UK outside of Europe, the US 230 billion. The other 5 nations that have been prioritized in the FTA include Japan, down at 31. It also includes the US, yes, that's above. It includes New Zealand, which is over there on the, it's not on here, but I think the trading relationship there is about 2 billion per year. And so if that really frames the focus about the importance of the relationship. So that's my call for prioritizing an FTA and making the opportunities here within China. Now, what have we actually taken into the recommendations? Now, these 5 things that we have prioritized in the position paper this year, I would say, whilst the position paper is focused upon things that need to improve, there are the underlying, as I say, the opportunities here. Now, the first is strengthening the implementation of market reforms at all levels. We certainly, as a business community, have welcomed the reforms that have been made, that British businesses are enjoying here and leveraging to their advantage. But there are still challenges, and one of the key challenges is a continued difference between the positive words and the implementation at the local level. So we have been speaking to the central authorities here to continue to make the case to improve the enforcement and action and execution of the positive commitments at the local level. Second, cybersecurity remains a core challenge, and year on year we continue to see this to be a concern of members. The data sharing and localization, many businesses now, regardless of they're a technology company, have ultimately become data companies because they're sitting on so much data. Now, the ability to move that data where it's stored, that localization, has a real serious implication to the ability to run global businesses and to run the full spectrum of what businesses want to do. For example, in R&D, there are implications there of the ability to move that data around. So we've been calling for greater clarity in the cybersecurity law and in these IT restrictions. Third, the ability to move money easily in and out of China. This continues to present challenges running global businesses, and we've again been talking to the central authorities about bringing greater clarity to that. Fourth, state-owned enterprises continue to play a significant role within the Chinese economy. There have been conversations in the past about the reform of this, but it is not necessarily the reform meaning the removal. Even in the 2 sessions which were held in June, which I mentioned earlier, Li Keqiang spoke about the new reform drive for the SOE sector. We wait very keenly for clearer clarification on what that will be, but the SOE space continues to cause a challenge for certain sectors in certain British businesses, and our ability to really deliver real sort of benefit to the Chinese economy and achieve our own full potential here. The fifth has been pushing on that bilateral trade and wanting to ensure that we have a strong relationship here, because as we've seen earlier, that trading relationship is significant and it can continue to grow. There is under-leveraged opportunity here, and that bilateral trade relationship is important. We actually introduced a 6th, which was not in the book, and I've included that here, even though there has been change, just to make the note of this. The COVID has presented a number of challenges, one of which is getting British nationals back into the country because of the restrictions on the movement of people. We have spent a long time over the last number of months engaged with the central authorities, engaged with the Chinese embassy in the UK to push for this. And we are pleased that there is now positive movement over the last number of months that is genuinely allowing the return of British nationals into China. This has been critical for British businesses to continue their operations here seamlessly, but there is more to be done here that we are continuing to work on with the central authorities. So those are the 6 things that we've taken as the top of our position paper this year. So what are the key takeaways? It may be a challenging year. We're certainly seeing on the ground here in China a slightly more positive environment, and certainly optimism is genuinely being felt on the ground here. There is business activity, but still clearly we have cautious optimism about what will happen next month, the month after, in relation to COVID. The direction of travel, it is positive, but there are still real challenges, and it requires organizations like the Chambers of Commerce, whether they're in China, Singapore, and elsewhere, to come together on behalf of the business community to push for better and stronger market environments. Now, as I said, the position paper is long. I've only touched in the last sort of few minutes on a few areas. I encourage those that are interested in learning more about the environment to please go online to the British Chamber of Commerce in China's website and grab the full paper. And with that, I will wrap up. Stop sharing screen. Back to you, Steve.
A huge thank you, Sinjin, and we'll come on to the Q&A section with you later. But now I'd just like to invite John Edwards, who's the Trade Commissioner for China. So I'd like to welcome John onto the call.
Thanks very much, Steve. Hello, everybody. So I'm going to talk a little bit about how it feels on the ground now from a DIT perspective, then something a little bit about where I think the Chinese government and consumer are coming from and what the opportunities therefore are in the UK, in China from a DIT perspective for UK companies, including those based in Singapore. So as you heard from Steve, China's essentially recovered faster than most other major economies from COVID. We expect a 1.5% GDP growth this year, which is not great, but compared to many other economies is a very significant positive growth. Retail has recovered, production has recovered. Retail, particularly in the month of August, the latest figures coming out looking pretty good. Now for us, for DIT, that means that we are actually probably more than many of our colleagues around the world extremely busy. So I thought I'd give you a sense of some of the stuff that we've been doing. Just in the last couple of weeks, for example, we had a very large event for 236 people, 12 British companies looking at land remediation last week. We had the UK-China Rail Forum looking at HS2 investment in the UK, and also actually at how we can work with China and third countries, including we've just signed the first agreement to work together on a rail project in Kenya with a Chinese company. We had an energy investors forum yesterday, and around the table there were Chinese companies who have already invested around 15 billion pounds in British infrastructure, and we were talking about how they can help power the green transition to net zero. China Bio, which is one of the big life sciences, was 2 weeks ago. Again, we had 24 British companies there. And EV is a big push for us, electric vehicles, and again, huge online events. Next week, we have a marine event. We've got 26 Chinese shipyards coming to that. Smart China, we've got 20 companies, UK companies with the digital pavilion for that. And then next week also in Shanghai, I'll be launching the rundown, the 100 days, the 30 days, I think it's 50 days actually, to the China International Import Expo. We have now between 200 and 250 British companies signed up to participate in that, again, mostly online. Now, people have spoken a little bit about the problems of Zoom and online, and what we don't know, we're very busy, we're doing a lot of online activity, is just how much of this will over the long term move into or transfer into real business. We hope quite a lot of it will do. We hope that the large numbers, I suspect that lowers the entry barrier for people to participate, and therefore not everybody participating will be as serious as if they had committed to coming to market or joining a physical offline event. But we hope that the large numbers will mean that we will be turning this into real business wins. And there's two things that we're doing around that. I think we've got a lot more professional about running online events than we were a few months ago. And we're also blending online and offline much more than we used to. So many of our events will have an offline element with online people phoning in from the UK. And we're trying to keep sustainable platforms going to do business matching alongside just webinar, seminar kind of events. Of course, that's the positive idea. China's coming back to normal. My bet in terms of COVID-19, and of course it is only a bet, is that if there is a second wave in China, and there may be, China is probably as well placed as any other country to see that through and to stamp it out at a local level without a major economic shutdown. But that, of course, is a guess in these uncertain times. Okay, so set against that, St. John has said some of the problems that are facing foreign companies in China, including IP, including cyber, including the new cybersecurity law, rule of law, market access problems, implementation of market access at a local level, etc. I think it's also worth reiterating that COVID has not, of course, made the Chinese economic problems disappear, and China had economic problems that it had to face before COVID-19. Those include very high levels of local debt, problems with productivity and the productivity of the investments that it's made, and also, in addition to the unfair playing field internationally that SOEs represent for foreign companies, SOEs are also something of a dead hand on the wider China economy and China market, suppressing China's own private sector. So those things existed pre-COVID and exist after COVID. What we also have now, of course, is US-China tensions, and I'm happy to answer questions on that. And they also, I don't think it is any secret to say that those US-China tensions and indeed UK-China tensions are affecting elements of the business and economic relationship as well. One of the areas where I think probably things have been slightly, one of the things that I think may have been slightly over-exaggerated is the supply chain fragility. Now, back in February and March, there was a lot of talk about large-scale movement of, sorry about that, someone phoning in on the other line, large-scale movement of supply chains out of China because of COVID. What I think we've actually seen since then is that the China supply chains have held up a lot more strongly than indeed in some other areas, other regions. And therefore, I don't think we're likely to see, and this is borne out again by the most recent US Chamber of Commerce survey, I don't think we're likely to see large-scale movement of production out of China, but perhaps some people taking a China plus one strategy. What does that all mean for us? Well, first of all, I think it means looking at what the Chinese government response is and what the need it therefore creates is. So the Chinese launched in May something called dual circulation theory. Now that sounds very dull and boring and communist, and it is all of those things. What essentially it means is that China will now see itself as a demand hub for Asia, and it will try and insulate itself externally through capital control restrictions, and also through cutting reliance, I think, on some elements of supply chain itself. So I think we will actually see some reshoring of manufacturing from outside of China back into China at some point. So what, as that dual circulation theory, is China looking for, or the Chinese government looking for from British business? I suspect three things. It's looking for skills. So I think there are big opportunities in areas like professional training and vocational training, early years, ELT, education technology. So the whole skills agenda will be a strong agenda for British firms. Tech, now that is a increasingly sensitive area, but I think there are areas of tech that we are looking at and actively hoping to promote, which will be less controversial than other areas. And those include fintech, clean tech, creative tech, ed tech, med tech, agri-tech. And that can be very small technical solutions, or it could be much larger technical solutions in the areas, for example, like clean energy. Okay, so that's tech. And then the third area I think we will be seeing a push for is for more advanced manufacturing in China and more FDI into China. China has taken some steps to attract that FDI recently. So, for example, in the areas like financial services, where it has removed the caps on equity held by foreign companies in pensions, in insurance, in wealth management, etc. But also in areas, for example, like pharmaceuticals, where they have changed some of the rulings on the procedures on clinical trials and on reimbursement of drugs to make it more attractive for people to put their R&D and manufacturing in China. And I think we will see more companies, therefore, taking an in China for China or in China for China strategy. And that is actually being led, despite everything you might hear, by United States companies, US companies, whose FDI into China has increased over the first 6 months of this year, year on year compared to last year. And then finally, I just wanted to say something about Chinese consumers. Now, sometimes Chinese consumers and Chinese government priorities align. So in areas like financial services, Chinese consumers there's a 250 million to 300 million middle class who are looking for more financial products. That actually aligns with what the government needs in terms of dealing with its aging population for pensions and insurance, etc. So financial services is an area that aligns. Healthcare is an area where consumer demand and government priority aligns. But there are other distinct consumer areas which I think are potential for UK. Food and drink is the fastest growing of our goods exports to China from a relatively low base, but the figures are impressive, 150% a year in certain categories. For example, beer, 150% a year, but food generally 56% a year over the last few years. Creative content, there's a huge appetite for that, whether it's gaming, TV, football, etc. Retail, high-end retail, cosmetics, fashion, etc. I won't go further because I want to leave time for questions if there are any, other than to put a last plug in for DIT to say that we cover China and Hong Kong here. On the mainland, we have 5 posts. We've got 192 staff. They're split by sectors and they are specialized within their sectors. So if you are interested in the China market, please do get in touch and we will do everything we can to help you. Thank you.
A huge thank you, John. Really insightful to hear what the DIT are doing here in market. So we're just now going to move into the panel portion of the webinar. So I'd like to bring in Nick Holt, who is the former chair of the British Chamber of Commerce. He's also head of research for Knight Frank Asia Pacific, and Joanne Reddy, who's the regional regional division manager for Euromonitor, as well as Sinjin Moore and John. So John, I'm going to go straight back to you. And as you said, China is actually very well placed to handle this pandemic. So do you think the abilities of ASEAN countries and specifically China to control the spread of COVID will actually attract more foreign investment in the coming years?
I don't think that is going to be the huge driver for more foreign investment into China, as it so happens. I think that is a short-term thing. What I think it does suggest is that the ability of Asian economies to deal with COVID means that some of the discussion earlier on about large-scale reshoring of stuff back into, for example, the UK or diversification has died down a little bit. We're not having the same conversations with companies that are based. I mean, famously, JLR was saying back in February that Ralph Speth was having to travel with suitcases full of spare parts to keep his factories running, etc. And at that point, I think people were thinking, if China is kind of out of the game, what are we going to do about it? Obviously, as it's gone around the world, and China and many East Asian economies have dealt with it better, I think that discussion about moving stuff out of China has become less pronounced. I think what is likely to drive over a longer term investment into China is if we see a protracted fracturing or decoupling of the global economy, particularly between the US and China, then I think you will see a shortening of supply chains, but they will be a shortening of supply chains both into China or into areas that can serve primarily the China market and into the US and areas that can serve the US market, and then into the EU and areas that can serve the EU market. Thank you.
Thanks, John. Just to mention, we have an absolutely incredible panel and we know how Zoom works. We don't want you to be passive. Please get in the Q&A box, ask questions. to the panel so we can really make this as robust as possible. But with that, I want to pick straight up with Sinjin, specifically on the back of the position paper and looking at the market access issues. So if we were to alleviate these regulatory challenges that British businesses face here in China, what actually would be the new opportunities? John touched upon it in certain sectors, but where are the real areas of the UK-China relationship in regards to opportunities and growth?
Well, look, as you say, I mean, John touched on a lot of areas of opportunity right now. And I think that highlights the fact that there are existing a huge number of opportunities because there are a lot of sectors that are fundamentally open. And so British businesses, whether they are physically on the ground here or sitting in the UK or elsewhere in the world, are able to target customers in the country. So whether that's retail, whether that's in other forms of services. And I think that part will continue to increase. Now, the opportunities or what will really drive this, uncertainty is undoubtedly one of the biggest hindrances that stops investment. And so the greatest certainty that can be driven in China beyond sort of COVID uncertainties, we will see investment increase in those opportunities. And again, as others have already said over the last sort of 40 minutes or so, China has responded to COVID ultimately quite well. And so we are seeing that certainty on the ground. We're not seeing the disruption that has been rumored and speculated about supply chains, again, as discussed. So that's where I see the opportunities really coming through. So yeah.
Good to hear. And then maybe if I go to Nick, and Nick was a former member of the Singapore Chamber in Singapore, so I'm glad back on the line. Nick, so looking at the APAC region, specifically maybe from a Knight Frank lens, what kind of role does China play in your APAC strategy? And then I suppose if you can give a bit of a broader sense of what does China play in APAC strategies for other, built environment companies?
Yeah, thanks, Stephen. Hello, everybody. Well, China's a hugely important part of the APAC piece for Knight Frank. I mean, being the largest property market globally in terms of its housing stock, and obviously, its key tier one cities maturing and really starting to deepen in terms of the amount of liquidity and the amount of trading we're seeing with some of the big global institutional investors. There's opportunities in so many different areas for players in the built environment, whether it's engineering, architects, real estate consultants like Knight Frank, and in other areas. But certainly if I think about Knight Frank, we've been in the market for around 25 years. We're probably not as big as we would like to. We're probably still a little underweight in China. And now why is that? I mean, there are a number of reasons, some of which Sinjin touched upon. One is challenges in getting licenses. We've always had a challenge getting our valuation license. Valuations is a big part of our business across the region, but we still haven't got a domestic valuation license here in China. That's been challenging. There are also other sectors of the economy, of the built environment, which are still closed, again, either through licenses or other non-tariff barriers. That means that Knight Frank isn't able to conduct business in China like we do in other markets like Singapore. So still challenges in terms of really increasing our exposure in China, but it's something that certainly from the top management down, we're very committed to continue investing. I think one interesting thing just to point out is how the structure of our clientele in China is changing. Maybe 10 years ago, probably 70 or 80% of our clients were actually international clients, Europeans and Americans, typically investing into China, and that could be on industrial, retail, or looking at office property. But what we're seeing now is obviously that Chinese corporates not only are dominating the prime office markets in the major cities in China, but also a big part of our customer base is helping some of the Chinese companies go overseas. So we've signed a deal recently with Xiaomi to find them office space around the world. We've worked with Heidi Lau, the hot pot company, again, finding them retail space outside of China. And we've also been working with some of the big SOEs in terms of their Belt and Road initiative, mainly around feasibility and research in parts of Southeast Asia. So there are certainly opportunities for UK companies, if they're at the source, if they're in China, to be working on China on their outbound activities. And perhaps I'll just mention, I mean, Steve, you asked about other sort of companies, other built environment companies. Again, I think most hold similar views tonight, Frank, the importance of China, not only domestically, but also potentially that outbound piece. If we think about the Singaporeans, they've invested hard and early in China. And the things about the Singaporeans, whether it's GIC, CapitaLand, the Mapletree, the Keppels, etc., they came in here early, and they're very patient, long-term investors. And I think that is something about China. You've got to have patience. You've got to have time in the game. You've got to build up your networks. You've got to try and understand how things are done here. And I do believe that with time and patience and commitment, you can be a success here in China. Thanks, Steve. I'll pass back to you.
Yeah, thanks, Nick, and certainly really interesting insight, certainly into the built environment. I just want to bring in Joanne into the conversation. So maybe from a Euromonitor perspective, if you can kind of give us a bit of an insight into the outlook for China in the rest of the year, and certainly maybe moving towards the recovery. What certain sectors are we seeing faster recovery or slightly slower recovery?
Absolutely, Stephen. So we recently released a paper on the global economic forecast. It was just in September. And in the most likely scenario, we're expecting to see China's GDP grow in the range of maybe 1% to 2% in 2020, but we're expecting a much bigger growth next year, between 6% to 9%. This is in 2021. So we all know that the Chinese economy has, withstood the COVID-19 pandemic very well compared to some of the other markets around the region. One of the fastest recoveries that we've seen. But like Sinjin mentioned as well, the economy still remains a bit vulnerable, to further, to the pandemic, whether there's going to be a third wave, a fourth wave, both domestically and also globally, because of the spillover effects from lower global trade. So overall, we saw that the recovery continues to be strong in the industrial construction, especially for state-owned enterprises, reflecting stronger government infrastructure spending. Recovery in consumption and retail sector remains weaker still, reflecting ongoing consumer uncertainty about a resurgence of COVID outbreaks, or more significant employment losses for the low-income consumers, and having also a weak social safety net. We saw that consumption among the low to middle income households in particular has not fully recovered from the COVID-19 outbreak. So these households have been suffering more from job losses, especially for jobs that couldn't be done from home, the jobs that require you to actually go to your workplace. And also China's income support measures have not been as generous in some of the most advanced economies. So that's where we're seeing. So in summary, we see that business confidence has recovered from the effects of COVID. However, consumer confidence is slightly below the pre-COVID outbreak levels. So that's where we are right now.
Okay, thanks. And so I'm just going to read out one of the questions that we've just coming in, and maybe this is a good one to direct towards John, actually, specifically around China investment for British businesses. So Singapore is a good gateway for UK companies as the second easiest country to do business, or do companies prefer Hong Kong in terms of proximity to the mainland around investment? And if John doesn't come to answer that, okay, he's come back on.
We see both models, to be honest. I think that there are certainly British companies who operate very successfully out of Singapore for the China market and have their Asia headquarters there and put their investments in through there. And I wouldn't criticize that model. The companies that are doing that seem to do very well. There are also some that have it in Hong Kong. But I think that regardless of whether or not you happen to come in through Hong Kong or Singapore and you retain an Asia-Pacific presence in those places, I think increasingly what you're seeing is people investing in their mainland teams anyway, even if they have strong Hong Kong presence, even if they have strong Singapore presence, because of that in China, for China drift that we're seeing. So I think that it may be, and it will depend from business to business, it may be that you will want to keep certain personnel and functions, either in, for example, in Singapore and Hong Kong, but I don't think that realistically it is possible to do significant mainland business without a proper presence now in the mainland. And as I say, that is the direction of travel you're seeing. Say, for example, Vanguard, one of the world's largest financial services firms, just closed down Tokyo and Hong Kong and moved its Asia headquarters to Shanghai. Now, not everybody has to do that. There are other British financial services companies I know who are retaining a very significant presence in Hong Kong, but who are at the same time beefing up their mainland business. But I will ask, actually, I mean, Sinjin advises many companies, I guess, on their corporate strategy. Sinjin, I don't know if that makes sense to you or you have a different view.
No, thanks, John. I was going to jump in and just share my perspective from talking to companies around here. And I would concur with what you're saying. I see that there's still the ability to use obviously Singapore, Hong Kong as regional bases, but I think the companies, as they build their presence here, they have to be on the ground here. And it's because the market is, yes, it's a big significant market, but it also, the further you are away, the more difficult it is to really understand what's going on here. And obviously in the COVID environment, it's now not even possible to travel in very easily, even with the prospect of travel bubbles and corridors coming up. So we've seen a number of companies that I speak to having shifted actually a lot more capability and decision-making into the mainland so that they're faster to respond and they're able to respond in a way that genuinely resonates with the local market. And I think that will just continue. So for all the conversation about companies possibly leaving China, you know, the challenging bilateral relationships or multilateral relationships, I think the reality is that if you have a customer base that is sitting in China and a customer potential here, then you have to be building a team that is physically here.
Maybe Sinjin, just to kind of follow on from that, and just one of the questions we had coming in is around decoupling and certainly onshoring. So just to follow on what you're saying, are we actually seeing British businesses pulling out of China, moving their operations to the ASEAN region, or even moving their supply chains back home?
I mean, I have been involved in conversations over the last months where companies have been evaluating their supply chains. That undoubtedly is happening, but it's happening for a multitude of reasons. There is some which have been happening for many years, which is changing cost bases, and companies are looking. Maybe there are other options where they can be manufacturing, whether that's Vietnam or other markets. So it's driven by cost. There are others that are looking, and John touched upon this earlier, which are looking really for diversification of risk. So it's not that they want to shut down their supply chains in China, but they have both due to bilateral and multilateral geopolitical challenges, and more recently COVID, they have come to the conclusion that they might be too centered on China and looking to diversify, but not looking to leave it.
So maybe if I draw Nick back into the conversation. Nick's been in Singapore, obviously he's currently here in China, he's been in the Vietnamese market. So certainly from an APAC perspective, are there any countries that are specifically growing faster than others, or certainly a good opportunity, a good investment for British businesses?
To be honest, I mean, if we look in this sort of in the middle of this COVID challenge, the only major market that's avoided a technical recession in 2020 has been China, which returned to positive growth in Q2 of the year. So there are many reasons why China should be the market that many investors or many businesses should be looking at, on top of all the huge consumer base, the growing middle classes, the opening up of certain sectors, etc. There's certainly opportunities here. But beyond China, a country that's on many people's lips is Vietnam, and obviously having spent some time there, I lived there for a couple of years, a number of years ago now, and also I've been sort of in and out working there for over a decade. Vietnam's somewhere that people are talking about. And again, similar things that it avoided the worst of the COVID. They locked down very, very early. The market itself has a lot of very sound underlying fundamentals, very young population, very good population pyramid, very literate population, very open to FDI. There's been a lot of foreign investment going in there. But having said all that, what I've learned looking at certainly some of the emerging Asian markets is often on paper they look fantastic, but going in and actually doing work and making it work can sometimes be challenging. So, the idea that there's just a pot of gold in places like Vietnam and waiting for you to arrive is probably not the truth. But that said, there are probably significant opportunities. I think just touching on what Sinjin talked about, sort of movement of supply chains. I mean, I agree. I mean, what we've seen is the movement of groups out of China, but over a longer term, not really a COVID-inspired movement, but over the longer term as a cost push factor, really into Vietnam, Thailand to some extent, and even India, where we've seen an uptick in inquiries from certainly low-cost manufacturing looking into places it can shift. But obviously shifting supply chains is a hugely lengthy and challenging process. So it's certainly something we're not seeing happen just overnight.
Thanks, Nick. And maybe if we actually we move our way back to China. One of the key points of our sentiment survey last year was the market potential, the market size of China. So if I go back to Joanne and I actually look at longer term trends, non-COVID inspired trends, I mean, is there, key consumer trends are rising in China? And I guess one of the most important things for the people on this call would be, what's the opportunities in those trends and in those consumer trends for British businesses?
Yeah, I think John Edwards talked a lot about the trends as well and opportunities for UK businesses in China. I'm going to talk about one trend that he did not touch about, and that's really about healthy living. So we did a survey across consumers in China to find out, what are their needs, what are their likes, etc. Across, I think it was maybe about 2,000 online surveys that we sent out. So healthy living came up as one of the top ones. People are getting a bit more health conscious, and being health conscious is not so much more about, it's not so much about obesity or, food sensitivity, etc. It's being a bit more holistic. So the perception of healthy living is shifting beyond just physical health. So representing a bit more of a holistic view, looking at where food, looking at exercise, looking at mental well-being and the whole lifestyle of healthy living. So that's one trend that we see that's actually been growing over the past couple of years, especially over the past 5 years. The other one that we're actually seeing also is shopping. I mean, shopping is one of the, I guess, is an important leisure activities when it comes to a Chinese consumer. In the midst of COVID, yes, a lot of the shopping actually moved to e-commerce platforms. But we are seeing some retailers actually come up with new innovative ways of actually still allowing consumers to enjoy that whole shopping experience, returning to stores, but having things like contactless checkout and payment counters, more spacious layouts, and even in some stores, and there was also like robotics that were actually incorporated to support customers, where you couldn't have physical contact with a retail assistant, for example. So we are seeing a lot of changes happening in the market. Both, maybe some of them will be affected by COVID, some moving even further, but yeah, the main big one that we're seeing right now is a more health-driven consumers, looking more of their lifestyle, not just the day-to-day food, etc. Yeah, that's what we're doing.
So I'm very conscious of the time, and I know there's a lot of questions to get to in the Q&A box. So maybe if I just have one final question, and this is to John. Now, I do understand, John, you are not the ASEAN Trade Commissioner, you're the China Trade Commissioner, but I think it would be remiss if I didn't ask. So Singapore has tried to remain neutral in the US-China trade relation and trade tensions, but especially given the heightened tensions, and given the history of the UK and Singapore, do you expect Singapore to play a similar role in the UK-China bilateral relationship in the coming years?
I think the Singaporeans have always been pretty canny about balancing the different pressures that they face in the region. I think I think it does make an important point in that question. And it's one actually which is, I can answer in terms of UK policy at least, which is, I think what is important is that every nation has to do two things. And they are not easy in the current circumstance. The first is to pursue its own national economic interest. And for the UK, that means charting a way within the current global tensions, which are in the interests of UK business and the UK economy, and are not solely in the interests of any other economy, China, or indeed any other economy in the world. And I won't go into the details, but people will have seen that that is a tricky balancing act. And at the same time as pursuing our own national interest and not having it set by others, I think the other challenge that we face is that we also at the same time have to collaborate on some of the great challenges that face us. And COVID, in the short term, COVID is the most obvious. And collaborating on vaccines, for example, will be absolutely vital. If it becomes a race for who gets a vaccine and doesn't give it to anybody else, that will be a disaster. So we have a short-term challenge. Longer-term challenge will be climate change. And if we don't collaborate across boundaries on a clean energy transition, then we are all in severe danger, including economically and commercially, and in terms of health. And China will be a massive part of that, because China is, to put it quite simply, it emits more carbon dioxide in the UK than the EU and the US combined. It's the world's largest importer, consumer of energy. And it's also the largest investor in both coal and in renewable energies. So it's got to be a huge part of that. So we need to all work together, and we need to protect our national interests. It's not easy. I think Singapore will find a way, as it always has done, to do that successfully.
Thanks, John. And some very fitting words to end on there around collaboration and global multilateral, bilateral collaboration. So with that, I would just like to thank our panel of speakers, to Nick, to Sinjin, to Joanne and John. It's been a really fascinating conversation. And I hope one of many between the UK, between the British Chambers of Commerce here in China and Singapore. It's been an absolute delight to connect our chambers, and I look forward to more collaboration. So I'm going to hand back to David Kelly now, but I'd just like to thank everyone on the line for their interest and their questions. Thank you.
Thank you so much, Steve, and thank you so much to our fantastic speakers for giving us your time today. Sinjin, Chairman of the British Chambers of Commerce in China, John Edwards, Her Majesty's Trade Commissioner for China, Nick Holt, Asia Pacific Head of Research at Frank Knight, and Joanne, thank you so much indeed. And Stephen, thanks so much for superbly chairing that very interesting session. Here at the British Chamber of Commerce in Singapore, we have got a packed webinar calendar. So just to name a couple of events, which I hope will come on the screen shortly, are our International Women's Day virtual conference between the 22nd and 29th of September. We've got some really brilliant speakers and 3 fantastically engaging sessions coming up. So please do get involved with that. We've got a Waste to Value in ASEAN event on the 6th of October and a really interesting Political Violence in Turbulent Times event on the 8th of October coming up as well. You will all, of course, receive a feedback form from today's session. Please do fill that in. It helps us to help shape better events and content for you going forward in the future. And that leaves me to say a final thank you to our panelists and our moderator today. Thank you so much for joining us. Thank you to all of our guests online. We hope you found that helpful, and I very much look forward to seeing you soon in the future. And with that, have a great evening. Thank you.